Good morning, everyone. How's everybody this morning? What's up, Flex? Doc, Tibby, how you guys doing? Hey, Dano, aloha. Okay. Hey, Juan, Ao, how you guys doing? Good. Bit of a slow night in Walmart. Little slow. Little slow. What's up, Raj? How you doing? What's up, Marcus? Hey, Donnie. Well, on a longer term chart, we're just kind of stuck here at that as the liquidation still there, but the new contract has now overtaken the old one in terms of volume, and we're just kind of hanging around waiting for information, right? Let's see what happens. The news cycle is, I don't know, anything interesting happened last night? I haven't read the papers or anything yet. I do have the Wall Street Journal open, but I don't think I've looked at it. Yeah, not really that much going on. Let's see. So, if you just look at a simple daily candle chart, you can really get a good sense of what's going on. You look at, you just pick a level, and you can see that all of that inventory is trapped long above it. On the old contract, we did a look below and fail of 66.21 on Friday, but this one didn't hit it yet. Our levels are working. We're just trying to make sure that everything kind of fits in the new contract. It's like new contract is like a new pair of shoes. You got to break it in. Overnight inventory is short. It's about 90% short, maybe 95% short. We are underneath yesterday's low. And there's something I want to bring your attention to. The fact that the overnight low stopped short of the cost basis of Friday. So, once again, folks, in the absence of larger orders, the inventory from Friday was taken and sold yesterday. It's being put on sale, but we have not come back to the majority of the cost basis. I'll show you on the next chart. So, and we had single prints which just filled. So there's a couple of things that you really want to, small details that you should be aware of when you're trading. One of those details is cost basis, right? It's actually not a small detail, it's a big detail, and you should be really aware of it because if a trader doesn't know the cost basis of where goods are priced, I really don't know how he's going to trade, or she, because you're trading blind. The other thing is the market respecting cost basis, right? So is the market, because if you had serious liquidation in the overnight tonight, you would have taken out the cost basis for Friday and we would have been down here at 66.76, right? So the fact that the market comes right back to where the large traders bought it on Friday just means that this is a regular inventory liquidation, which means it's just a little sale to bring in buyers. And bring in buyers it did, because when we put in that overnight low, we took out the previous day low. So what happens is when you take the previous day low in that overnight session, anyone who's long above that previous day low, they get liquidated out. The short sellers come in and buy, wholesale traders buy, and now the dumb shorts who shorted under 28, they're going to cover, so now the target is the previous day low. There should be a seller somewhere there. Now, balance zones. I did a balance zone up here at 36 and a quarter to 42 and a quarter. Ah, it's okay. Then I redid the balance zone here, 18 to 24. Either way, it's going to work, right? Just so you know. So what I'm going to do is I'm going to use the balance zone from the bottom. So balance is 18 quarter up to 24 quarter, double it up to 36, and wow, there we are. We just filled the gap. Okay? Oh. I'll put the levels in here. Smaller zones tonight because range is smaller, right? You could see you could use distribution balance or accumulation balance. It doesn't matter because the product never changes. Now, people who don't understand that will be like, JJ, what are you talking about? Well, you want to think about it in simple terms. So down here, we're buying ES contracts. Here we were buying and selling ES contracts. So it's not like we were running a beauty salon here and a tire store here and a coffee shop here. The business is all the same. So the inventory, the cost basis areas of the inventory shouldn't change. Right? Make sense? Cool. All right. I'm a little lazy. I'm just going to go put in all the stops. So that's where we had supply, and we ran out of supply, and we ran up and got that supply. So now we're just going to fart around underneath yesterday's low. The overnight point of control is up here, and that's only 1,200 contracts. Let's see if we can move that down underneath the previous day low. I am not constantly moving around. And welcome to the stream, TH3S1 Sticky Band 11. I'm just going to call you Bob. That makes it a lot easier. So Bob, no, we just keep the you guys in your screen names. uh, we try and keep this as simple as possible. Because let's face it, retail trading is a serious pain in the ass. And the more you overcomplicate it, the more you start losing your hair and the more you start getting health problems and losing money and all of that bad stuff. So we want to keep it as simple and as uncomplicated. Once I set a cost basis, I'll keep it because the price that you paid for your cheap crap never changes, right? So they paid this much for it. They're selling it here at 2 times profit. If we get above 36, it's 4 times profit, right? And that's all it really is. Now, the only time I change it, like on those Fed days where you get like a 60-point move up and then it goes sideways, then I'll redo a cost basis. Or if it drops down 50, 60 points and goes sideways, then I'll redo it. Just because you go 2, 4, 8, 16. Once you get up into 32 times cost basis, it's a pain in the butt. But generally, you can just keep it the same. And you'll see that it works really well. The reason it works really well, it's not that I'm smart or anything. It's just that these markets are very, very math driven. And the 0 and 1 mafia who write the algos for this thing, it's very precise. So we could just manage risk very nicely. Actually, this balance zone is a little off. It's off by a couple of ticks. The high should have been here and the low should have been here, but forgive me, I did the zones before I had my coffee, but they'll be good enough, right? We can always redo them later if you want. So move up, you can see this is the accumulation, distribution, and now if we run out of buyers, we're going to come all the way back down to 24. And you can see now that the new contract, the M contract, has overtaken the old contract as rollover continues. You have 16 and a quarter to 19. Yeah, that works too, right? Hey, nice work, Matt. Nice work. How's life in Calgary? We got 3 people in Calgary in our room and 1 in Edmonton. We have a lot of Alberta people in the room. Yeah, so, life is kind of slow. It's like a bit of a slow night in Walmart for us tonight. Um, Rocky in Tampa. Lucerne. You're in Switzerland? Hey, Cryptomania, what's going on? That's cool. Do you live there or are you just visiting your money? Every time I hear Switzerland, I think Swiss bank accounts and chocolate. And watches, of course. How stereotypical. You're off the 15-minute? Yeah, I've never actually traded off a 15-minute chart. I mean, I hear good things, but I've actually never traded off of it. Oh, cool. Welcome, Matt. You're just visiting your money, Rocky? Okay, cool. Just make sure you don't lose the bearer bonds, eh? You think about 100-euro lunches in gas station cafes? Yeah, everything's more expensive in Switzerland. Yeah, living in a tax haven, eh? Yes, don't misplace the bearer bonds. You know. Oh, let's see. Where can we take a trade? I'd like a look below and fail of 24 and a quarter. That would be nice. I've never driven in Switzerland, so I wouldn't know. They don't they don't take the autobahn thing. Yeah, we went and tagged VWAP. Matt, now, mm, yeah, I don't speed anymore because when I was young, I've done some really stupid things in cars and on motorcycles. So I think I've pressed my luck enough in my youth, so I don't really push it now as I'm barreling down on 60 like a runaway train. Pending home sales is the news today at 10. So there's really nothing going on. Tomorrow we have PPI, Magnum PI, all the PIs. Oh, tomorrow's a Fed day? Dang it. Nobody even said that. Tomorrow's a Fed day, so it's going to be slow as hell today. Okay. All right, so tomorrow's a Fed day. There is a war going on, and it's going to be fairly risk off. Fairly risk off environment, I'd say. So just chill out. Lots of miles on the treadmill, Dave. I've plateaued in my weight, so girlfriend's gonna kick my butt when she comes home at Easter. So I gotta drop another 10 kilograms. Oh, Bitcoin. Good question. While the ES is percolating, let's go take a look at the coin of bitterness. Okay. Um, Bitcoin. For you CL traders, we're in distribution over 91.44. Coin of bitterness, what I'm looking at on Bitcoin is cost basis. See, after this big liquidation sorry. Do you guys see how in Bitcoin we just came back to this cost basis here? This was the cost basis, distribution, boom, boom, all of that stuff. And we just came right back to cost basis. So in Bitcoin right now, we are just kind of going back and forth here, right? Here are some levels for Bitcoin that I'm looking at. One is this 75,734 area. Can we accept above it? We're also going to have sellers up here at 79 and just here. When you get back up over 84,000, there is going to be resistance. So this area right here, that's sort of the discount zone. We came dropping in. We're going sideways here to rebuild that cost basis. And let's see if we do this or if we need to go sideways longer. Now, I don't trade Bitcoin. And the reason I don't trade Bitcoin is if you look at a 5-minute chart or a 1-minute chart, like, I don't know, man. That does not inspire confidence for me. So what I do with Bitcoin is I just buy a little bit and I put it away and I hope you kids know what you're doing. Because I buy just a little bit of it um, where if I lose all my money, it's not going to kill me. And it's just a very small position. So I'll add, I think my last buy was around 74,000. So I'm underwater in the stupid thing. I should have been buyer down here in the 66s. but I got busy doing something else and I completely forgot about it. Um, yeah, so I should have been buying more Bitcoin under 70. We'll see. It'll take some time. I don't see a gap on the 4-hour chart according to TradingView, but I could be wrong, Matt. I could be wrong. We'll see. ES, what are we doing on ES? We're coming back to cost basis. There's 67.24. Now let's see. Can we stay above 24 quarter? If we do, try a little look below and fail. So I'm long one at 25, one at 24 and 3/4. I'm going to use 23 and 3/4 and 23.5 as my stop. I might be too early. I'm too early. I'm too early. Should have waited until this candle closed. But let's let it run. There's a seller just above 25. It's not the greatest trade. As you can see, I'm not really that dialed in on this trade. I could see there are bids just at 24. You see the bottom of those candles? If those bids hold, I'm okay. If not, I'll scratch the trade. Boy, there's really not much follow through today, is there? You'd expect much more follow through at 24.5, 24.25 on a look below and fail. There we go. Okay. There we go. So I got a sell order out at 26. I'm long 24.88 on 2. And I got a sell order at 26. Let's see if I can get out. The seller's here now. Gosh. This is like waiting in line at the DMV. All right, take me at 26. Come on, you rat bastard. Ah, okay. I told you I was looking for this trade well before it happened, S notes. I didn't get taken at 26. Yeah, if you don't like it, S notes, you know, what do you want me to do? I told you I was looking for a look below and fail of 24/4. I told you I entered the trade and I wasn't really on the ball. I am not flat. I'm still long. So, are you complaining? Are you criticizing? I'm not flat. Where'd you go now? You got nothing else to say? What do you guys think? Come on, S notes. Come on. Come on. Where are you where's your big mouth now? So now he's quiet. He, she, it, whatever. S notes. Come on, man. Where are you at? Where are you at with your big mouth? I'm still long at 26. It's okay. Okay. Well, you can go pound sand. About one at 26. I'm still long one. I'll offer the other one out at 26 quarters, see if I can get taken. I'm flat. Uh, there's always a critic, right? Yeah, that's a real, excuse my language, but that's the chicken shit way, right? You call people out. Trade worked. Look at that. I told you, look below and fail of 67.24. There it is. I called that trade well before it happened. I told you guys at the beginning, half an hour ago, I was looking for a look below and fail of 24 and a quarter. I also told you I got in the trade and I was early, but it worked out. Now S Notes is gone. His mommy's probably making him his sandwich. Go back to the basement. Right. We might get to VWAP, Matt. If enough people are short under 67.30, we'll go tickle VWAP up in the 35s. Don't be rude. Oh, I like being rude, AO. Obviously, you've never worked on a trade desk. I don't put up with bullshit. I'm too old, AO. If people don't like it, they don't have to watch. They can continue losing money. I'm just trying to help people make a little bit of money. That's all. It's not like I'm charging hundreds of dollars for the trading room. We charge 20 bucks, right? I like being rude. I'm very polite until idiots come onto the stream. You got to remember I used to be a bouncer, so there's nothing that you can say to me on this stream that's going to rattle me. There you go. Look below and fail of 67.24. Worked pretty nice. So what's the business reason for that trade, right? What's the business reason for the trade? The sellers under 24 didn't have to sell under 24, right? Very simple. Very simple trade, right? The sell orders under 24 quarter are finished. The market rotates up. You buy a little bit here, you put your stop here, and you sell into strength. Now you can see that we got a nice big green candle. I wasn't anticipating that green candle. I wasn't thinking that we were going to get over 27, right? Because I thought, there's going to be a seller here and a seller here. But those sellers ran away as soon as they saw size. They saw size buyers, they ran away and they lifted the offer, and anyone who was short under 27 raced to cover, and that's why you get that big green candle. Every trade has a business reason. Would you be able to understand how strong a sell is based on the wicket left above? No, I don't look at those things, right? Redcom, all I do is I watch the offer. So as I took that trade, I actually expected to get stopped out of it when it started taking the 24 quarter, when it was screwing around here. The only thing that didn't make me scratch the trade were the bottom of those candles. Okay? That's why I stayed in the trade, and I had a 26 offer and it got taken. So that's okay. And I sold way too early because I only had 2 micros. This is the first trade I've taken all morning. It was a test. So I don't look at wicks at all. All I care about is the top of the candle and the bottom of the candle. I don't care what the candle looks like. Now, why do I say that? Right? AO, do you want to just chill out because he's not talking to you? And what are you, the rudeness police? Chill, man. Okay? Like, enough of this. All right? Cut it out. No, the reason I'm looking at the top and the bottom of the candle is because of the print, right? Is the print. I care about the print. What is the print? It's where the transaction happens. So I know that there's a seller here, and I know that they stopped selling here, right? If you guys on YouTube can't behave in the chat, I'm going to stop the comment section. So if you're here to actually learn something, learn. If not, piss off. All right? I've had enough. All right? I'll just kill the chat. Okay? So smarten up. So Redcom, as you see, the sellers were here, and then they moved down here, and then they moved down here, and here, and here, and here. So as the sellers move their offers lower, it means they're putting price on sale to capture the buying. So I don't care about wicks and all of that stuff. Does that make sense? I just care the top of the candle and the bottom of the candle. Make sense? Nice work, man. Nice work. Well done. The holiday was good for you. Nice. Yeah, and that's exactly what you done because they were front running VWAP, right? They were front running VWAP. So if you were shorting, you'd put your stop at the top of that candle, right? And then right back down. I'm on a 1 minute. This is a 1 minute chart. Windmill, Willie. It's a 1 mil chart. So came down right to that little cost basis, stopped selling, offer moved up. Yeah. So you don't really have to obsess about wicks and the type of candle. All you need to worry about is the top of the candle and the bottom of the candle. Now, this makes your life a lot more easy because you don't have to memorize all of those candle patterns and chart patterns. Because if you know if the top of the candles are consistently lower, that means they're putting it on sale, which means if you're short, that's a good thing, right? And if you're long, that's a bad thing, right? Because they're moving price down. If the top of the candles are getting higher, it means that the sellers have seen buyers and they're raising price, right? Pretty simple stuff. This way, it takes a lot of the pressure off you to memorize a whole bunch of candle patterns. So now you can focus on the business instead of memorizing patterns. And there's nothing wrong with candle patterns and all that stuff. The problem is they don't really help you with execution. So we're in a big kind of rotation here between 25 and 30. Yeah. Let's see what's next. And if we get really run out of buyers, we're just going to come right back into that blue cost basis area. It's very simple. Yeah, I try and stay away from the middle of the zone. Now let's see, are we going to do another look below and fail of 24 quarter? I got up to grab another coffee, so I'm not long. But if I was, see how that seller is still there at 25? Let's see. If I were going to go long, if I'm taking another long now, so now I'm announcing the trade before I take it, right? If this stays above 25, I'll enter. So I've got a bid in at 25 and a half, and I've got my stop in at 24 and a quarter, and I've got my sell order at 26 and three quarters, and I think I'm going to get stopped out on this. Yeah, I got stopped out. So the second look below and fail might take a little longer because we trapped all those people long, so we've got a little resistance pushing down. So you see how that happened. This one worked because there was just one move. The second move, we've got people trapped up here, might take a little longer. It's kind of actually working now. So those of you, right, I called that trade out, told you where I took it, told you where the stop was, told you where it got stopped out. If I were to take it again, I'd look to buy it here, and if it holds 25, I'd stay in it. That's good. Good stuff, Howard. Good, good, good. So you could clip in and out for a couple of points. I should have probably used a larger stop, right? Should have probably used a larger stop on that trade, but that's okay. Exactly, right? Hey, you're wrong. You know, the one thing about this business is you're going to be wrong a lot. You know, just when you're wrong, just move on. Try and use it to learn from and just move on. Does it work the third time? Let's see. Coming right back into this little cost basis here. We do have quite a bit of inventory above us. Very true. Offer is lifting though, slowly. There it is again. Jeez. Pretty responsive. I didn't take it that time. Interesting. So, what is that telling us, folks? It's telling us that the liquidations that are bringing us down to this level here are just that. This is the cost basis. This is where the size traders paid for their goods. They sell it, they bring it back down to where they paid for it. The buyers come in, they raise price. They sell it back down to where they paid for it, they raise price. Same thing. So that is why I was looking, well, I told you half an hour before it happened, when the market comes down, I'm looking for look below and fails of 67.24. So that's where you get an edge because you understand where your goods are priced, you understand where they put it on sale for profit, and then you understand this is the place you buy it when they put it on discount. Make sense? This way your charts make sense, right? Your charts actually make business sense. You're not looking for iceberg lettuce orders and all that bullshit. You're just using simple, common sense. You know where your inventory is priced. You know that when the wholesalers put it on sale, that's where you look to buy it because you get the best deal. Your risk is managed by the bottom of those candles. right? So if you want to learn how to do this, okay, if you're tired of all of this nonsense and people just spouting off and all of that stuff, if you really want to learn how to trade, we'll teach you at the Trading Syndicate. We've got, you can sign up, you get 3 days for free, and then it's only $19 a month. So it's not we're trying to make a lot of money off you guys, right? We charge people so we don't get a bunch of idiots like the people who just were on YouTube, right? Who were right? It just keeps people like that out because even if you ask them to pay $5, they'll run away, right? So we charge $19. We're not making a lot of money. We're trying to teach you how to make money in a sensible, rational way where you can actually get results because of repetition of good business practices. Can you say that they worked quite some time on cost basis? They probably use it for a longer time. It could be. Market profile really, David, the reason why I run this market profile chart is when I started retail trading, I didn't trade candles at all. Market profile is just basically a half-hour candle chart that has a lot of information in it. You don't need it to trade, right? I still keep it on there because I'm used to reading profile charts. Market profile gives you three things that a candle chart doesn't give you. One thing it gives you is it tells you the inventory very quickly. Okay? This is a good question, David. Right? While they're chopping around here, let me go show you. So market profile, the blue stuff is where 70% of the inventory is priced. So right away when you look at market profile, you can see, oh, accumulation, distribution, sale, down to where you bought it. So that's number one. The second thing market profile tells you are these single prints. These single prints on the way down are an area of supply, on the way up are a short position. So it tells you inventory, it tells you where the shorts and longs are trapped, and then it'll tell you something called poor highs and poor lows, where there's buying and selling competition. Other than that, that's all the information you need off market profile. Now, there are people who offer market profile courses, and they're great and everything. I love them to death, but none of that is actually going to make you any money. So market profile is like a map of the city. And then if you want to transact here, you go and you look at the 1 minute candle chart, and you can really dig in and you can see what's going on in that neighborhood specifically. Does that make sense? So you do not need market profile. You can use a half-hour candle chart like this. So if you're trading on a larger time frame and you want to use a half-hour candle chart, it's the same thing, right? You can see that there will be where it trades, where it goes sideways, that'll be a cost basis. Then you'll go up into distribution, and then you'll go back down. Do you notice? Here's the cost basis. Here's the distribution for profit. And when we came back down, we came right into that cost basis, stopped, and turned higher. Right? It's a sales chart. You know what? I've never looked at the gap between the candles and used it as a single print. You can use volume profile for the value area. After a while, David, you won't even need to use volume profile because you'll know that where it goes sideways, there'll be volume, right? Time, where it trades time, there will be volume. You see there's volume here sideways, volume here sideways, right? But you can see the accumulation, the distribution, right back to the accumulation zone. Yeah. So you don't have to have market profile. You can get along quite well without it. Make sense? The other thing you'll know is where the market takes the highs, that's where the shorts will be trapped. Where the market takes a swing low, that's where the longs will be trapped. So you don't even, like for single prints, if you think it through on the chart, you'll see where it makes sense. Do you guys understand? Because where you take a high, that's where, like, look at this. Check this out. When the market took this high here, notice that on retrace, the lows of those two half-hour candles are right at that high. Do you guys see that? Because the shorts are trapped under that level, and that's where they came in and bought. So 67.33 quarter on that move up, that on the retrace, you'll look for bids there. It's the same thing as on the 1 minute because the business never changes. It's just this is sales on a half-hour time frame as opposed to a 1 minute chart, which are sales on a 1 minute time frame. It's just a sales chart. David, does that make sense to you? When I was a market maker, I didn't use charts. You don't, you create. See, that's the thing, guys. You don't use charts, you create them. So, what I do when I'm doing a deal and I'm distributing stock, what I'm doing is I'm trying to get you guys to come in and buy. So let me show you. Here's an example of one of my client deals. You know, we opened the stock under 10 bucks. We took it up over 20, brought it back down in the 15s. And then when we started the promotion campaign, you could see that we started to move the stock higher and higher and higher into distribution. So I'm not sitting there watching this because I'm actually, every single one of these orders is me. When you look at this level 2, all of these traders they're all me. Do you guys get that? Every single one of these orders is me. All of these market makers report to me because my clients took the company public and they own all the stock and I'm selling it. So I'm not trading this chart, I'm creating it to make you guys come in. That's why market makers and deal people don't use charts. They build charts. And the chart is like a party invitation that sucks you guys into coming in and buying, right? How do you get supply? You take a company public. And how do you move the stock? That's a very expensive course, Fazro. That course is like 10 grand a day, what I charge. Because when you move stock, you may make hundreds of millions of dollars. But for you guys, what you want to look for is, see that high? There's distribution. Now check it out. Look, there's resistance there. What was support has now turned into resistance because the supply is trapped above it. Make sense? Do you see what I'm talking about? You don't have to have market profile. All you need is a candle chart and understand a little bit about how business works, and then you can focus on execution. Because your focus should be execution. It's the same thing over and over and over again. It never changes. Distribution after accumulation. Give me some feedback, folks. Let me know if that makes sense, if you understand, if I have to explain it in other ways. Yeah, you could trade on it. Yeah, it's real simple, right? It's just a simple candlestick chart. Yeah. So what we do at Trading Syndicate is we try and simplify things so you folks can actually make some money and go enjoy your life instead of sitting in front of the screen for 30 hours trying to figure out candle patterns and all this crazy crap that people talk about like delta and just wasting time, right? Wouldn't you rather know that, hey, if I'm long at 67.20, I know there's a seller at 30, so I'll sell at 30, make 10 points, and then go enjoy my day? Wouldn't you rather do that than sit in front of a computer for hours and blow up your account? So if you're interested in making money in a simple way, come join us at the Trading Syndicate. We've got a 3-day special going on, right? And if you come in, DM me, right? There are no stupid questions, right? I just don't like stupid comments, but there's no such thing as a stupid question. Come into the room, DM me. If you need help, we'll help you out. So it's really simple. When shorts are trapped under a level, that creates support. When longs are trapped over a level, that creates resistance. Very simple. Okay? All right, folks. Thanks so much. Have a good morning. We'll see you at 9 o'clock. Volume nodes, high volume lymph nodes, David, are just cost basis. See, there's that, what you guys call a high volume node. That's the cost basis. Do you understand what a cost basis is? Like you buy, let's say you buy 1,000 oranges and you pay 10 cents per orange, and then you go up here and you sell your oranges for like 80 cents, but then you run out of buyers and say maybe you've sold 600 oranges up here, then you have to put them on sale, but you put them on sale and you don't come back down to where you sold them at. Do you understand? So yeah, that's a cost basis of accumulation of oranges. This is a cost basis of distribution of oranges for profit. And this is when we put our oranges on sale right back to where we bought them. Very simple. See? Really, really simple. So if you want to learn how to trade in a practical manner, check out our room. We'll teach you. You know? Life doesn't have to be insanely complicated, my friends. Have a wonderful, wonderful morning. Yeah, exactly, Willie. Now you got it, Boxcar Willie. There you go. Beautifully said. Right? So if you were long at 67.50 and the market went to 35, yeah, you're done. Right? You're like, okay, uncle, I've had enough pain. Take my money, go away. Same thing. You're short at 15, it goes up to 26. Okay, okay, okay. Right? Hey, Sticky Bandit, welcome to the room. Oh, the guy from Home Alone, that's cool. Now I understand the name. The more they complicate this business, it's because they want you to lose money. They're just sitting there with their hands open and waiting for the general public to screw up and throw all their money at them. That's what Wall Street is. It's like a huge vacuum cleaner for cash. And they're just vacuuming you down every day. So if you want to learn, come into our room, DM me, we'll talk, we'll chat, we'll make some money, and we'll have a few laughs. Right? Just like the old days. Thanks, everyone. Have a good morning. We'll see you at 9 o'clock. Stay out of trouble out there, okay? Bye for now.